embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Okay, good morning. It is 8 a.m. on Monday, the 29th of September 2025. That means we have completed 3.5 years, 3 years and 26 weeks of what will be roughly an 8-year fire journey or fire experiment if you prefer. As you can see, the market closed down 1/3% on Friday. It has literally just opened. So the current market value is now sitting at £94 one penny. So it has just about popped over the highest previously seen values. Not by much, but we are essentially now at the highest point of trading in the S&P 500 that has been seen in the past. So I think it's fair to say there's every reason to expect a correction or a pullback at some point in the not too distant future. But that notwithstanding, the portfolio value as things stand currently sitting at 28,500. The return on investment just over 30%. There are 302 shares in the portfolio, and the average purchase price is sitting at 72.17. Let's just roll down to have a little look at the stats here. So as you can see, both figures here the same, so that does confirm that this is the highest point that the S&P 500 has seen to date. So the high this morning, 94.05, and exactly the same figure represented for the 52-week rolling high. If we scroll further down, you will see figures for annualized performance. So over the past 1 year, actually not that spectacular. Largely influenced, I suppose, by Donald Trump's tariffs announcements, which then resulted in the subsequent V-shaped recovery. So just under 15% for the past year, round about 19% for the past 3 years, and over the past 5 years, roughly 16.33%. Essentially, I suppose, if you look at the size of the candlesticks as compared to what we see on the whole, let me just see if I can just stretch that a little bit just to make it a little bit more, what would you call it, user friendly. Maybe there's not actually a significant difference in the candlesticks now as compared to the past, although I thought that they were perhaps a little bit shorter. I mean, obviously whenever we had the big fall, the candlesticks were long, and the sort of initial bounce back, if you like, they were quite long, but then things seemed to settle relatively quickly and just get into a nice steady climb, but not too fast and not too much at once. And although there was a little bit of a leveling off here, really it was just a tapering rather than, there was nothing remarkable in how it happened, and then things have jumped a little bit over the past I would say 3 weeks, resulting in that position that we're in currently. But I would say, to my mind, from what I see here, I think this does look like normal market activity, albeit I fully expect there to be some sort of a correction or a pullback, just in light of the fact that we've hit a new high in recent times. It's not unusual for the price to creep back below new highs and to essentially revisit the same price point on more than one occasion, if if I could put it like that, before completely abandoning that price point and moving on higher still. So a lot of chat there. Before we have a look at the notifications, I just want to draw your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up, how'd you get on?
It's a draw.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
You can go now.
Rude. You make Monzo Monzo.
Okay, and just to mention, there are several affiliate links now in the description for the video. I think, if I remember rightly, they are Monzo, Smarty Mobile, and there's also a free shares option if you are certain that you want to open an account with Trading 212. If you use the affiliate link, I believe you will get some free shares, and so will I. But as I say, please only use that if you're certain, if you understand the risks, and you would have been opening an account with Trading 212 anyway. So of course we are on the Trading 212 practice platform here. We are going to have a little look at the notifications before we do the weekly investment. Not too much to say actually looking at this. So IREN, I don't know what that is, slides 9% after JP Morgan cuts rating to underweight with, pardon me, $24 price target. Biggest stocks before earnings: Carnival Corp, Jefferies Financial, Progress Software, is that Uxin, and Vail Resorts. I don't recognise any of the names in the notifications this morning, well, apart from JP Morgan, but that's not about them, that's about them taking an action. I just wonder if I click on this, will that give me more information? Okay, no, so it's just giving us a view of the stock, if you like. Let's have a look actually, because there is an AI analysis now. I would put a massive cautionary exclamation mark over the AI analysis, because in the past I have found it has been far too short-sighted to be particularly useful, certainly as regards the S&P 500, but let's see what it says nonetheless. IREN experienced a volatile week with sharp price swings, peaking near $49 before settling around $42, implying a shift from strong momentum to consolidation. Current indicators show a neutral market state with cautious trading and mixed momentum. Goodness, look at the 52-week rolling price point, anywhere from $5 right up to almost $50. there's a little bit about them, which is kind of what I was hoping to find. They are headed by William Roberts. They have 144 employees, so not a big concern. They're in financial services, the financial capital markets, based in Sydney, Australia. IREN Limited operates in the integrated data center business. It owns and operates data centers powered by renewable energy. Its grid-connected facilities are purpose-built for the power-dense computing applications. The company was formerly known as Iris Energy Limited and changed its name to IREN Limited in November 24. IREN Limited was incorporated in 2018 and is based in Sydney, Australia. So I suppose for a relatively young company, they are less than 10 years in, and they have already achieved listing on the stock market, which is quite the feat. Albeit it does seem as if essentially their business is to do with financial services, so I suppose maybe that's not such a surprise. But yeah, just thought I'd have a quick look at that detail to see what that was about. So yeah, it's interesting. They're saying here JP Morgan cuts the rating to underweight with a $24 price target. The price point is currently $42, unless they're talking about some different currency, but I wouldn't have thought so. That is a massive difference there. Anyway, that is the notifications as they stand, and as you can see, the last trade was 7 days ago, so we are exactly on target for the one broadcast a week. Just before we go ahead with this week's investment, just to recognize the market is now up 0.2% today, so that has basically put back Friday's closing down 0.33%. So we're going to go ahead and put in our weekly purchase of £120. We're buying the S&P 500 exchange traded fund, seen here on the Trading 212 practice platform. At today's value, that's going to buy us roughly 1.27 shares. We do it as a market buy. There is no stops, no limits. We just send it through and hope for the best. The order has executed. We got 1.27 shares and the purchase price 93.96. If we look then at the figures, the portfolio value is now sitting at 28,500. Return on investment bang on 30%. We now have 303, almost 304 shares in the portfolio, and the average purchase price has risen I think 9 pence from 72.17 up to 72.26. So there we go, 3.5 years in. I can honestly say I was not sure how this would go, especially over such a short time frame as this. But I think I have been pleasantly surprised. I mean, I certainly wasn't expecting to see 30% growth, although I am kind of reassured that that is the case. And I suppose, as I've said many times before, whenever you're investing £120 versus a portfolio value of 28,000, you're not going to influence the return on investment very much at all. So from that point of view, yeah, it's nice to see it. I wasn't fully expecting it, but I suppose it makes sense. As to whether or not we can say that the method is proven at this point, I suppose it is still too early really to say. Although what I would suggest is that you know, even if you look back in time, this let me just make that a little bit more obvious. So this was the dip at the time of COVID, and after the market recovered from that dip, it never looked back. It continued up, and then the next period of uncertainty was essentially the start of the Ukraine conflict. As you can see, there was a fair bit of bouncing about before things kind of settled, and then decided to continue on an upward trend. That continued right up until Donald Trump's famous tariffs announcements, which caused this shoot. But even though it caused that shoot, that still didn't bring it below the price point at which the Ukrainian conflict had sort of limited the market. The V-shaped recovery commenced straight away after, and as you can see now, the market is just about ready to edge above that previous break on activity. So I think with that said, we are coming to the end for this episode. If you found it interesting and informative, why not hit the like? And if you're interested in following the journey, please subscribe to the channel. I broadcast every week, investing £120 each week into the market, in the hope that after 8 years we'll see the method proven. But that's it for this week. Thank you for watching if you have been. I'll be back next week with more.